guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, owner of Mortgage Specialists. So today we've had a few questions just because markets ever change up and down. And with markets changing, so do mortgage interest rates. And that's what we generally want to speak about here today is what are my options for locking in a mortgage interest rate? And there's lots of variables. There's lots of different decisions to be made. There's lots of choices to be had. So today we're going to go through that. It isn't as complicated as you may seem to think it is, but there are different options that you might not be sure of. So first of all, what does locking a mortgage interest rate mean? Basically, what locking a mortgage interest rate is you tell the lender, I want to lock in that rate. It guarantees that rate for a certain time frame. And that's the biggest, I think, misnomer that people don't understand is that you get that rate for a specific time frame. They're not going to lock the rate indefinitely. They're not going to lock the rate generally long term. It's going to be a shorter period of time, anywhere from 15 to 60 days. But why do people want to lock in an interest rate? Because they're worried that they might go up. And so you want the best interest rate. Obviously, everyone wants the best interest rate to make that happen for them. And so by locking it in, it guarantees that you know what your payment is going to be because your payment is based upon the interest rate. So now that we understand a little bit about what locking a rate is and why people would do it, the easiest way I describe to people is locking is very similar as purchasing a product. Whether you're buying gas at the store, whether you're buying a stock, whether you're going to the grocery store and purchasing asparagus, whatever the case may be, once you purchase that item, it's yours at that price. There's no going back generally and renegotiating or changing the price or that amount, which is the exact same thing that locking an interest rate does. Once you lock, it's confirming that you have purchased that rate for that amount, whatever that amount is, whether it costs you nothing, whether it costs you some money, or whether it gives you money back for a particular rate. So let's talk about what are the factors that affect your interest rate. There are many things. Obviously, the most important factor that determines your interest rate is your credit score. The higher the credit score, the cheaper the rate is. Loan amounts do make a difference, whether you're borrowing $50,000 or $500,000. Generally, lending companies and or the whole secondary market system makes income based on a percentage of the loan size. So even though people would say, hey, I'm putting a large down payment down, your smaller loan size might not be as good of interest rate as a larger loan size would be. Also, what we use the terminology to be is loan to value, the amount of down payment you put. Again, if you put 5% down versus 40% down, that's different in interest rates. And every 5% down increment may give you a different interest rate depending on your loan amount, where you're located, and also the credit score. So we factor all these things into a chart, which then gives you where the quote for the interest rate is. And this is why it does get complicated because there's no such thing anymore as a going interest rate. Everybody depends on the type of loan that they're doing, the down payment, their credit score, and the type of property makes a difference, whether it's your primary residence or it's a secondary home or it's an investment property. Also, the time frame of how long you lock makes a difference, and the market conditions, meaning there could be some crazy things going on in the financial markets that are just artificially affecting mortgage rates at that time. But we also plug all of that factor into what's called a pricing engine, and it gives us what the risk factor is, and that's what your interest rate is how risky or how non-risky you are as a borrower, and we're going to reward you or discipline you for where your credit and all these scenarios are put together. This isn't arbitrary. It's not discriminatory. It's the same for all individuals. We all play by the same interest rates and numbers, whether you are this type of person or that type of person. We want to make sure that we're not discriminating against different kind of race, ethnicity, national origin, sex, things like that. So because of it, again, once we look at all the factors equally, you would get the same rate no matter where you have going on. So now we understand a little bit about how rates are based and what locking options are. I will tell you that you can lock your loan for 15 days, 30 days, 45 days, 60 days, and so on and so forth. Generally every 15 to 30 days, all the way out until 270 days, which is 9 months, all the way out to a year, depending on the lender and what the time frame is going on in the market at that point in time. So why is it so important to know that? Because the shorter you lock the time frame, generally the better interest rates they are, because what the markets are always going to assume is long term things are going to be worse than they are today. So if you're locking a loan for 90 days versus locking your rate for 15 days, the 90-day lock is either going to cost you more money or it's going to give you a higher interest rate. Where a 15-day obviously is the cheapest you can do. But what the negative here is if you have a long closing, do you wait it out and see if rates get better? Or do you just take what's available and locking? And that's what a good mortgage loan originator would do for you, is give you the facts, give you what's going on in the markets, giving you the best information they can to have you make your best decision on when to lock in interest rate. It's different every day. I can tell you here at Mortgage Specialists, we subscribe to many services. That's all they give us is financial information of what's going on with the markets, so we can be educated and giving you education to give you the best answer of what to do. A lot of times clients ask, what would I do, Brent, if you were in this boat? And I would say this or that, depending on what I know is going on with trading of mortgage-backed securities, the entire financial markets, things like that. So a little bit about the time frames. It can cost money additional to lock depending on the time frame, whether you want to look at locking for a year or 6 months or even 90 days. It could cost you additional monies, or obviously they give you a higher interest rate. The biggest question people always ask about is, can I float down my interest rate? They hear about this, they read about it online, but a float down generally is going to come with a cost. And what is a float down option? First of all, it's an option that one time after you lock, you can choose to take a lower interest rate than what you locked in. So for that feature, they're going to charge you the money to do that. It's no different than you going to the grocery store and say, hey, I bought this, or I bought this shirt at the clothing store, or whatever the case is. They're not just going to give you a cheaper rate or cheaper payment or cheaper amount down the road. They're going to charge you for that risk or that scenario that could happen, saying, hey, you can pay for this insurance policy. And if you pay for this insurance policy or take this higher rate, which is still money that's being paid, and you can get that option to float down your interest rate. So that's a big one that's discussed. I would tell you it generally never happens on a regular basis. People want to float down and pay the money to do so. So really all locking is doing is giving your word that you want to move forward, you want that interest rate, and we as mortgage lenders will lock down that money and guarantee you that rate until closing. But the biggest question you always have to figure out is, how much time do you need to make that loan work? Meaning, how much time frame do we need before you're able to close? And that's what a lock really does, is make sure you're locking your rate through closing. Well, some factors that can cause issues here are, what if my closing is delayed? What if my new build construction home isn't done in time? And that's a problem. If our lock expires, you have to reevaluate and state, either take the worst case pricing on rates, or you might have to pay extra money to keep that particular interest rate. Because in the back room, what we don't always understand is that the lenders are playing this insurance game of they're investing money on both sides of it so that they can assure they can give you that interest rate at the end of the day as well too. So how do you really get a lock? You really communicate with your mortgage lender. I would always tell you, put it in writing so you have it documented. Or if you did have a phone call with your mortgage originator, write it down that you chatted about this so you have something documented. I can tell you every so often we get calls that someone forgot to lock in their interest rate at a different company, and I was very upset because rates have changed. I can share here that we've never had that happen, because if we do make that mistake at Mortgage Specialists, we will still honor that particular interest rate and pay whatever it takes to get you to that rate. And we have had that happen just due to human error. Thankfully, it wasn't large sums of money, but it could be, depending on how fluctuating the markets are. Hopefully here in 2023, we'll start to see rates come down, and it'll be more beneficial for consumers to lock in a new interest rate on a refinance and be able to close on that transaction to get that future interest rate for a long term. I know this was a longer video. I hope you understand a little bit more about what locking entails, what are your options available to you, but we're always here a phone call away at Mortgage Specialists at 402-991-5153, or you can check us out on our website at mtg-specialists.com. We hope you have a great day. This is our 95th episode of Mortgage Matters in Minutes, and we're counting down to the 100th episode. We hope you've learned as much as we enjoy giving the information out. I hope you've enjoyed learning as much as possible about the mortgage and real estate industry. Have a great day. Mortgage Specialists. Driven, trusted, reliable.